Dividends are the Rodney Dangerfield of investing. They don't get any respect, and it's the one thing that investors should pay most attention to. And the reason behind it is that it provides steady income so that every month you can reinvest your dividends into new shares of companies that you own. Number two, provides downside protection. For example, if you've got a $1 million portfolio and the market falls 10%, but you're making $100,000 in dividend income, you break even. Number three, it prevents you from market timing or trying to trade stocks actively, because the worst dangerous thing you can do is be selling a stock without receiving the dividend cash flow stream along the way. Now, how do we get to the promised land? Right now, dividend yields are about 2.5%, meaning that it would take about 14 years to get to the promised land of 10% yields at cost. And a yield at cost is simply income divided by how much you paid for the stock. So what kind of a return are you getting every year on your investment? On a $100 investment at a 2% yield, that's $2 in income. And as companies increase their dividends every year, then you should be able to compound over time to get to that 10% level. And once you're there, it reduces your downside risk, because only 19 times in the last 100 years has the market gone down more than 10%. And in the good years, then there's the added gravy to your returns. So if the market goes up to 10%, and you're making a 10% yield, then you're going to make a total return of 20%. That's how you make money in the long run, and that's why investors should not disrespect dividends. Dividends rock. They're the best thing that can happen in your portfolio.